can you get a passport if you owe back taxes? Can you renew an existing passport if you owe back taxes? The basic answer is yes, it is possible to get a passport or renew a passport if you have some tax debt. There might be some hoops you have to jump through. I'll talk about all the rules pertaining to this later on in this video, but first I want to get one thing straight. When I'm talking about back taxes in this video, specifically about how taxes relate to passports, when I'm talking about back taxes in this video, I'm talking about federal tax debt. Debt you owe to the IRS, the United States government. Why? Because passports are issued by the federal government. Who issues passports? The U.S. State Department, an executive department within the federal government. If you owe state back taxes, that has nothing to do with your passport. You could owe your state $1 million, cannot touch your passport because states do not handle passports. Now, if you owe your state back taxes, they might be able to take some other licenses and privileges away. They might be able to take away or suspend some kind of professional license. They might be able to take away your driver's license. I made a video about that. Link to that video at the top of the screen. But when we're talking about passports, we're talking about federal taxes. Okay, so that's what we're talking about here. And even with federal taxes, the only kind of tax debt, federal tax debt, that can result in you not being able to obtain or renew your passport is seriously delinquent tax debt. I'll explain what that means in a bit. But first, why are we even in this situation? When did the IRS or when did the federal government get the power to mess with your passport because you owe back taxes? Well, it all started back in 2015, December 4, 2015. Okay, see that date here, 12/4/2015. Obama signs $305 billion highway bill. What was this? This was the FAST Act. Okay, FAST stands for Fixing America's Surface Transportation Act. It was dubbed a highway bill. Okay, and part of this bill, or part of this law, was the creation of Internal Revenue Code 7345, which you can see on screen right here. Okay, I mean, the FAST Act did some other things, but for our purposes, the real nasty thing that it did was add this section, IRC 7345, to the tax code. Revocation or denial of passport in case of certain tax delinquencies. Okay, and the first part of section 7345 says, if the secretary, as the Secretary of the Treasury, or sorry, this is the Secretary of State in this case, if the Secretary of State, so basically the State Department, this secretary here is the Secretary of the Treasury, basically the Treasury Department. If the Treasury Department receives certification by the Commissioner of Internal Revenue, the IRS, that an individual has a seriously delinquent tax debt, the Secretary of the Treasury, so the Treasury Department, shall transmit such certification to the Secretary of State, the State Department, for action with respect to denial, revocation, or limitation of a passport pursuant to Section 32101 of the FAST Act. So basically the law says if you have what's called seriously delinquent tax debt, see those words here, seriously delinquent tax debt, okay, then the federal government can deny your passport application, can deny your passport renewal, and in certain cases could even revoke your passport. Okay, but of course the big question is, what the heck is seriously delinquent tax debt? Thankfully, it's defined in little b right here, seriously delinquent tax debt. In general, for purposes of this section, the term seriously delinquent tax debt means an unpaid, legal enforceable federal tax liability of an individual that meets, okay, these three criteria. It has to have been assessed. It has to have been officially recorded in the government's books. And when it comes to personal income taxes, the two major ways that tax is assessed is either when you file your tax return and you still owe money on that tax return, IRS will get it, process it, then it will assess the tax on that return that you provided to the IRS. Assess means it formally records it in the government's books, right? You, the debtor, the government as the party that you owe. Another way that tax can be assessed is if you don't file your tax return and the IRS files what's called a substitute for return or an SFR for you. In this case, the government will send you notices saying, hey, you need to file a tax return. If they don't file a tax return, then the government will say, well, okay, if you don't file a tax return, we're going to file a tax return for you. And then they do that. That's the SFR. Then the IRS can assess tax based on that SFR. That's substitute for return. Talk all about this in my substitute for return video. Link to that video at the top of the screen, probably over my face right now or something. Okay. Then it can assess the tax based on the return I prepared for you. So the tax must have been assessed, right? And if you owe the IRS, that means the tax has been assessed, which is greater than $50,000. And by the way, this amount is adjusted annually for inflation. Right, that $50,000 figure is adjusted for inflation annually. Here's a CP508C. That's the notice that the IRS sends when it does certify the tax that is seriously delinquent to the State Department. So looking down here, right, $59,000. Okay, $59,000. That's the threshold for 2023. Right, the $59,000 threshold is adjusted yearly for inflation. $59,000 is the 2023 figure. Have they updated it for 2024 yet? I don't think they have. Or maybe they have. I don't know. I'll have to check on that. Still early in the year. Right. So to be considered seriously delinquent, tax must have been assessed. Okay. Assessed right here. It must be greater than $50,000, right? Whatever the amount adjusted for inflation is right now. And this is the last one. With respect to which a notice of lien has been filed. Okay. So notice of federal tax lien. That's just a document recorded in state or county records whereby the IRS gives the public notice that you owe the IRS money, right? And it gets dibs on any money you get, like say from real estate transaction. And the administrative rights to appeal that lien have been exhausted, or a levy has been made. Okay, so either the IRS has filed a notice of federal tax lien, or the IRS has taken levy action against you, actually taken your stuff. Okay, so garnished your wages, taken money out of your bank account, levied your Social Security, right? Because if it's done those things, right? If it's filed a notice of federal tax lien against you and the time to appeal has passed, or your appeal rights have been exhausted, or it has actually taken levy activity against you, that means what? To you shrewd tax professionals, if there's tax professionals out here watching this, what does that mean? That means that you no longer have CDP rights, okay, for this debt. Okay, so if these three conditions have been met, the tax debt can be certified as seriously delinquent. Now, this isn't necessarily, right when you hit this threshold and this happens, is a passport notice going to be sent to the State Department? No. The IRS actually has to send notification. They do this in batches, is my understanding. So, it's not like, I owe over $50,000 and now you would get notification of this. So you would get the notification from the IRS, right? The CP508C. And then if you actually go to apply or renew your passport, you're going to get a notice from the State Department. I'll pull an example from those up from our files. Right, so on top of the IRS notice, when you actually go to renew or apply for a passport, the State Department, and my apologies, I was just looking for one from our files off the top of my head from old client cases, and this is the one that I pulled. The State Department will send a notice too, basically saying, hey, look, thank you for your passport application. Unfortunately, you were ineligible to receive passport services because the IRS certified that you have a seriously delinquent tax debt, blah, blah, blah. And then, however, you do have kind of this 90-day thing. If you get a resolution with the IRS within 90 days of the day of this letter, right, then you can kind of jump back into your passport renewal process or passport application process. Easier said than done, let me tell you that much. Okay. So let's talk now how to get back your passport rights. Well, you could pay off your tax debt. That'll do it. Right? You will no longer have seriously delinquent tax debt if you pay it off in full. Obviously, this isn't an option that many taxpayers have. So there are other options available to you. Another option is you can get into an installment agreement on the tax debt. Right? We've talked about installment agreements a lot here on the channel. A full payment installment agreement will fit the bill. So will a partial payment installment agreement. If you want more information about those hardship-based partial payment installment agreements, check out the video here at the top of the screen. I also have videos about other kind of installment agreements as well. Because once you get into an installment agreement, the IRS will now cease to consider your tax debt as seriously delinquent, and it will decertify your tax debt with the State Department. You could get into C&C, currently non-collectible status. We've talked about that a lot here on the channel before. Basically means you show the IRS, based on your financial records, that you do not have the wherewithal to make payments to the IRS right now. And I've made a dedicated video about C&C status. You can access that video at the top of the screen. Finally, you could submit an offer in compromise, right? That's another route, if you qualify for it, is to submit an offer in compromise. And if the IRS accepts your offer in compromise, then bam, right? And you pay your debt off, or pay the amount of your offer off in the 5-month or 24-month period, whichever you elect, then obviously your tax debt is settled. No more seriously delinquent tax debt. Now, I will say one thing here, and I wouldn't recommend filing a frivolous offer in compromise just for this purpose, okay? But sometimes the IRS will actually decertify that tax debt to the State Department, right? I mean, taking back that certification that tax debt is seriously delinquent, meaning you can get your passport back and all that. Sometimes the IRS will take that step simply upon receiving the offer in compromise and deeming it to be processable, okay? But that's not the normal course of events in our experience. Usually the IRS, it's not until the IRS actually accepts the offer in compromise that the decertification happens. And the decertification is what you want, okay? The certification is when the IRS tells the State Department, hey, this cat has seriously delinquent tax debt. Don't let him get a passport. Don't let him renew a passport, or they might flee. And the other one, the decertification, is what you want. Decertification is when the IRS takes that back, says, oh, no, they do not have seriously delinquent tax debt anymore. All right, folks, I'll probably make more stuff about the passport stuff. We've had many very fun passport cases here at Choice Tax Relief. If you're dealing with a passport issue or any other tax issue pertaining to your back tax debt, or you have unfiled tax returns, please reach out to us at Choice Tax Relief. There should be a little button popping up right here that takes us to our homepage. You can fill out the form there. Give us a call, 866-8000-829. That's 866-8000-TAX. Also some other tax relief videos here on the left-hand side of the screen. Thanks so much for watching, everybody, and I'll see you in the next video. Bye-bye.